This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about a reversal pattern today. I know in most of the videos I have discussed, or a lot of the videos I discuss, a pullback play in the trend. I think that should be your go-to. You should be able to find that in multiple time frames. You should know what the setup is. You should know what the trigger is. It's very, very important to recognize good solid pullbacks inside of a trend. The other thing I mentioned, and in fact, what I did was I did offer a RSI version of a pullback trade as well. And then I've also spent time discussing breakout trades. And I'm going to go into that a little bit more in depth over time. But one of the things I wanted to discuss was the reversal pattern and playing a reversal trade. I get a decent amount of questions, in email form from people who are asking about this. And I just want to make sure, I start to focus on this a little bit more since there is so much interest in it. Just remember the highest probability trade is when you already have a trend in place and you're buying a pullback. But there are times when you don't have that opportunity or the market's reversing and you want to be sure to know how to play this or what to look for. So I'm going to go into that today. So let's go straight into this chart. I've got a monthly on the left and a weekly on the right of Vulcan Materials VMC. And I'm actually starting with the current price action here. And I wanted to point this out because the fact of the matter is that this is not a classic reversal pattern. What's happened here, this big down move and move back up, it's a climatic reversal. It's not what you typically find. If you go back historically, it wouldn't be something that I would spend a huge amount of time on. You do need to know how to play this. But I think what I'm going to show you today is more of a classic reversal. And I think having that in your arsenal is probably more useful than this pattern. This, again, is more of a climax pattern. I think you need to understand sentiment. I think you need to understand volume and where you're getting sort of like a long liquidation flush pattern. And when that happens, where to be aggressive. And again, I mean, that's something I can go into in more in depth. But the fact is that if you look at my S&P videos, we've talked about it a lot of undercut and rallies, patterns that develop in this situation. We are looking for zero line reversals in this situation. Anyway, so that is for a different video. For now, what I want to do is go back in time and I want to show this classic pattern. And if you notice, you have a trend of lower highs and lower lows on the monthly chart. And then we start to show signs of a reversal here. And if we wait for these signals, here are two sort of classic. The trend has reversed. And there's your first pullback. And there's your second one. And, if you go to the weekly chart, we can see the both of those setups here and here are playing into the trend on the longer term time frame, which had already reversed. But what I want to be able to do, based on a lot of the questions I get, I think a lot of people want to take advantage of this pullback here, this pullback right here, and so if we're going to do that, we want to be able to recognize a couple different things that are taking place. First, you need to understand price structure, and that is the pattern of lower lows and lower highs, and is that changing? And then trend line analysis, and you want to be able to look at the MACD in this case. ADX is important, but probably not as important at a bottom in a lot of cases, simply because it does lag somewhat. So those are the things we're going to zero in on today. And if you notice what happened at the low, we had finally sort of broken this downtrend line, which had been in place for a long time. and, several years. And so we break the trend line and then we come down and test this area. And so again, if we're looking at it on the lower time frame, just so you know, this is right here. So we've gotten a move up. And if you notice in that up move, we broke the trend line and we went all the way up to the 40 MA for the first time in the decline. So this is out of my book. There's the pattern that I refer to as a 40 to 18 bounce. And if you have a move, it's a severe decline, a long decline to the downside, and you get all the way up to the 40, and you're breaking the downtrend line at the same time, I would refer to that as a 40 to 18 bounce. But it's also the first step in a change in trend. And so I'd be looking at this spot on the pullback and evaluating a couple things. Number one, is the 18 finally starting to flatten out? Now, in a lot of cases, it might be bellowing around and cupping around in terms of and starting to rise on the pullback. But in this case, as long as it starts to flatten out after you've hit the 40, I still think that is a good sign. The other thing that I think is important to recognize or be on the lookout for is a pinch developing. So first off, you made a lower low here, and if you notice, the MACD is making another higher bottom. So we have divergence that's been developing, but we haven't had a situation where we went to a new low and we made a higher low here and then followed that with a pinch. And so when you have that, that really increases your odds that we're getting ready to turn the corner. And at that point, now we're looking at this pullback area, which is basically under $40. And we want to go down to the lower time frame. And what we're looking for on that time frame is actually the same pattern of break of the downtrend line and a rally up, and then we come down and test. And when we test that, now we have the 1-2 on the higher time frame and the 1-2 on the lower time frame. So on this time frame, we're going to go and look at the break of the downtrend line, and then so we rally up. That's one, and then as we pull back. And the pullback, I prefer to see a 50% retracement. Sometimes it's only a third of a retracement. I go into a little bit more detail in the book of the different ways it can play out. But in this case, you actually got down, I would say probably about a 618 retracement of this move. And to me, that's a good enough test. And again, if we zero in a little bit more, you can see that the... Let's give me a second. We can see that the 18 crossed down below the 40 on this time frame. So again, we have this same pattern that we look for when the trend is in place. We're actually finding that same pattern even on a reversal, and it can be used that way. But I would strongly urge you to not use that by itself in a reversal pattern. What I'm looking for on the reversal patterns is a 1-2 on the higher time frame, and then I want to be getting in on 2 on the lower time frame. And so I'd be inclined to be thinking that based on that, I'd be getting in somewhere in this area after the test, and then it started to move up. And, depending on how aggressive you want to be, your stop can be here, or you could use this stop. Either way, I want you to understand that you are looking to get in on the monthly reversal, okay? The lower time frame is just the trigger to get you in on the bigger time frame. And I've come across this in some of the coaching I've been doing. I want to make sure you guys do realize I'm still available to do coaching. You can contact me at info@investlikeapro.us and let me know if you have an interest in that. But what I'm coming across is, and I did this for years. I'd focus on the lower time frame before seeing what I really wanted to see on the higher time frame. Don't even go down to the lower time frame until you really have a good idea or you have what you're looking for on the higher time frame. Once you have that, then go to the lower time frame. And I think if you think that way, your odds of success are going to skyrocket. You're going to be getting in and understand that you're getting in on this trend and you're just using this as a mechanism, as a trigger to get in on that. And again, there were a couple other opportunities if you missed the first one, but what we're trying to do is get in on this reversal pattern. To me, this is the earliest spot to get in on this trend where you have a pretty high probability that the trend is turning. Every other time, every other pullback was too early, too aggressive. You could play this reversal on a divergence if you wanted, but I can tell you that from a risk reward standpoint and a probability standpoint, you're better waiting for the 2 on this higher time frame and then go look for the next 1, 2 to develop in the lower time frame. So I hope that makes sense. Go ahead and give me any questions you have on this. I know there's people that are trying to learn how to play these reversals. Hit that subscribe button. And if you like this type of content, please give me a thumbs up. Thank you.